Hey everyone, Kyle here with our first December Tax Talk Tuesday topic. And today I have an update for those of you who received Payroll Protection Program loans, otherwise known as PPP loans, a little bit earlier this year. So as many of you probably already know, the PPP program was a component of the CARES Act that created forgivable loans, but the forgiveness aspect was only allowed if certain criteria were met. Forgiveness is not guaranteed, and a recipient actually does have to apply for forgiveness. Otherwise, the entire loan is going to be paid back at a really low interest rate of 1% over the course of 2 years if the loan was issued prior to June 5th, or over the course of 5 years if the loan was issued after June 5th. As a quick aside, if you need any assistance with applying for PPP loan forgiveness, our team is here to help with that. Just give us a call, chat with us on our website, or send us an email and we can set up a time to talk and review your documentation for forgiveness. But now that the year is winding down, we are receiving more and more guidance from the IRS on the relationship between loan forgiveness and the deductibility of the expenses related to the loans. So in mid-November, the IRS issued Revenue Ruling 2020-27, which essentially states that if a taxpayer used PPP loan funds to pay approved expenses, that includes payroll, mortgage interest, utilities, rent, and you reasonably expect to receive loan forgiveness on what you use the PPP loan funds for, basically you cannot also take a deduction for those covered expenses. So if you usually are deducting your rental expenses, your utility payments, payroll cost, mortgage interest, whatever it might be, if you are regularly deducting those, you are not going to be allowed to take a deduction for the portion of those expenses that you paid with PPP loan funds. So anytime the word reasonably gets thrown around an attorney's ear, they're going to perk up because that means that there's usually a gray area involved. And in this case, the IRS's ruling creates a nuance. So basically, the IRS is saying that it doesn't care whether you're waiting on a determination of forgiveness or if you haven't applied for forgiveness yet. If you reasonably expect that the loan proceeds will be forgiven, you cannot deduct the expenses that you paid with those loan proceeds. And to say this a little bit differently, if you're not expecting PPP loan forgiveness, then you can deduct your expenses as you normally would. And if you really think about this, it does make sense. You probably shouldn't be able to deduct expenses that you paid with borrowed money that you don't have to pay back. But many taxpayers and tax preparers need to understand that there is a nuance here, or they're going to face the possibility of a much larger tax bill than they might have been expecting. And they could potentially pay interest and penalties on any underpayment. So again, making sure that you're not deducting the expenses that you paid with PPP loan funds if you were expecting the PPP loan to be forgiven, or at least a portion of that PPP loan to be forgiven. So whether you need help applying for PPP loan forgiveness, want to discuss whether forgiveness is the right move for you, or even if you're going at this alone, just know NC Planning is here to help, here to step in for you where we're needed. So please let us know if you have any questions. And as always, everyone, thank you again for watching, and we hope you have a great day. Thanks.